Welcome to the Podcast Editors Mastermind Show. I am Steve Money Nerd Stewart, along here with my co-host Mark Deal.
The real deal.
He is the real deal. And today we're going to be talking about invoicing with a special guest, but a very good friend of mine. Well, Eric, are we good friends or are we just money nerd friends?
We've known each other at least a decade now, so I'd say that's a good friend if I've known you that long.
Eric is a financial writer, speaker, and consultant whose expertise lies in banking, credit cards, investing, cryptocurrency, insurance, real estate, business finance, and financial fraud and security. His work has appeared in places like the US Today magazine, Forbes, Business Insider, NerdWallet, Investopedia, and US News and World Report. And you'll be able to find more about him at ericrosenberg.com. Eric Rosenberg, welcome to the show.
Thanks for having me. I'm excited to be here.
This is a topic near and dear to my heart. It's about invoicing. It's about charging our clients through the process of we'll say it's a legal document. Would an invoice be a legal document?
I'd say yes. It doesn't have to be drafted by a lawyer to be a legal document. It represents basically a demand for payment for services rendered. So if you have a contract with a client or even just an email agreement, technically that would still count as a contract. Once you've done the work and send the invoice, they are notified they should pay you. But we usually use friendlier terms than demand to pay.
Now, throughout this recording here today, we're going to be probably interchanging some terms. Eric, I'm going to ask you if there's a real difference we need to know about. Contractor, there's the gig economy, people who do gigs, which is maybe like one-offs. Like we'll say Uber drivers, they're each one-off gigs. And then we have things like freelancers. In my mind, they're all pretty much the same, although they have slight differences. Do you think there's any reason we need to go deep into that?
Well, so I'd say at a high level, you can think of a contractor and a freelancer as basically the same thing. It means you're doing work for a person or a company, but you're not an employee. Gig workers are a little bit different because you're usually, in my mind, a gig worker is someone who works through an app like Uber or Fiverr or DoorDash or one of the others. And with that type of a system, the platform you work with is doing the invoicing and handling payments behind the scene. When you're a freelancer or a contractor, that falls on you to figure out how to do. So that's where I would differentiate. But in either case, you are a non-employee doing work for somebody.
And the difference I see between a freelancer and a contractor, when you say contractor, it sounds more like a long-term relationship, where a freelancer can be almost like a gig economy worker, where you can pick and choose the ones you do. But really, when it comes to invoicing, there is no difference there in my mind, except for maybe doing some recurring invoicing and stuff like that. Would you agree with that?
Yeah, generally I think that's true. So sometimes when I think of contractor, I think of it could be a small business, but when I worked even in my Fortune 500 days, we'd have contractors who would come in and have a 1 month or a 3 month or a 6 month contract, and they would work more like an employee, but they weren't technically employees. They'd invoice and get paid that way and have to deal with their own taxes and withholdings and all that. Where a freelancer, I think of as someone more outside who's doing specific tasks and projects. So for me, I'm a freelance writer primarily, and I'm a freelance podcaster, and I've done some freelance video work for clients. So with those, sometimes it's a long-term relationship where I do 1 article a week or 2 articles a week or 2 podcasts a month, but it could be just a one-off. One of my clients who I normally do written content for asked if I would record a webinar that they can offer as an on-demand for their users. And they paid me the same way as a freelancer as they do for the articles. So when I would think about that for podcast editors, it's probably not one-offs as much, though you absolutely could do that. Hopefully you're building relationships with the podcasters or the producers who help put the show together, and you're working with them on a recurring basis. But any way that you're providing that service, you should get paid for it, right?
Yeah. And that just leads me to one last distinction between what we're talking about here is we're talking about people who are working for others on their own, from their own business. They're not employees getting W-2 forms from the IRS or, from the employer that goes to the IRS. we're getting 1099 type of documents saying, I, podcaster, paid you, podcast editor, this amount. And that's where invoicing comes in, because we've got to charge our clients for the work we've done.
Right. We could do a whole 5-hour episode just on business entities and how you structure that working relationship. But for our purpose for invoicing, it doesn't matter if you're a sole proprietor, which means you haven't registered a business. You're just working as you, or maybe you have an LLC or even an S Corp if you're fancy. So any of those, you'll handle invoicing the same way.
Yep. And more of the legal entities is Mark's domain. He's more into that scene than I am.
Yep.
So a couple of things that I like to talk about with people when we're talking about invoicing is some best practices. And that's what I'm hoping to get from here. The problem is we're talking about the podcasting world, and the answer to everything is it depends. So I'm going to try and get some pointed answers from you if I can. So let's try not to use those two words. It depends is off the table for the day. In your opinion, what would be a better solution for a contractor like myself who works for different podcasters as a freelancer or as a contractor? Invoicing before the work is done or after?
For your benefit, it would probably be better to get paid in advance, which would mean invoicing in advance. But in reality, most clients aren't going to want to do that. Occasionally, when you're working with someone for the first time, you might say, I require payment upfront for our first project. But typically, in the business world, there's kind of a level of trust between the client and the service provider, so the editor here, where you assume that you will get paid if you do the work and send the invoice. So typically, that's what you'll do, is you'll do the work first, and then the way I do it, the way I suggest most people do it, is you bundle up all of the work that you've done over a specific period. For me, it's monthly, and then you send an invoice. For me, it's automatic. The last day of the month, the invoice goes to the client. They know what they owe me for that month's work. And outside of a very, very few couple of situations, I've always gotten paid.
Excellent. It's funny. You're the first person I've ever heard also say you invoice people on the last day of the month. It's something I do. I thought it was weird.
It's in the business world, it's pretty common. When we're solo, self-employed business owners doing online work like we do, sitting at our laptops or our home offices or coffee shops or airplanes, wherever we're working, we kind of have to figure out a lot of it as we go along. Unless you've been to business school, they probably haven't taught you this, and unless you've worked in accounts payable or accounts receivable, I can call that AR and AP going forward, just because that's what we call them in the industry. But if you've worked in those, you see kind of common structures and common ways that these types of relationships work. And that monthly cadence is helpful for a handful of reasons. And the biggest one is, nobody wants to sit there and write 4 checks a month. Nobody wants to click and make 4 payments a month. Nobody wants to enter their credit card 4 times a month. Once a month is a long enough period that it isn't necessarily inconvenient, but it's a short enough period you're protecting yourself. You're not doing 2-3 months of work and hoping you'll get paid a big lump.
Mark, I know that you are probably on the end where you'd like to invoice people before the work is done. Is that correct? What are the benefits there?
Either I invoice, actually the invoices are paid invoices after payment has been made. So for example, you and I run Podcast Editor Academy together, right? So when people join Podcast Editor Academy based off their reoccurring billing cycle, depends on whichever plan that they choose. When their credit card is charged, we generate an invoice, actually generated from you, Steve, from your LLC, and they get that invoice saying that this is paid. But to Eric's other point, I also typically don't do work ahead of payment. So once the contracts are reviewed, contracts are signed, like here's a payment on how to do things, whether it's reoccurring or transactional, they can choose, and the contract language would vary depending on those. But once they say, yes, I want to do this reoccurring or this transactional, once they pick the options and they book, pay, whatever it is, they pay, then an invoice is generated automatically from whatever system. But that's how I do it. Now, I do recognize, and especially now that I'm getting into servicing very large companies in the metro Atlanta area, we're talking like, billions in revenue, they don't like to work that way. They like to work what Eric is talking about. So I'm going to be learning just as much on this interview as our listener is. So that's why I'm going to be quiet about my expertise and listen to Eric, because he knows what's up. And with the very large companies that I've been dealing with lately, they like to do what he's talking about with accounts receivable and accounts payable. So I'm ready to learn.
But I think that's interesting that you say that the invoice is generated after payment, because this is new to me, I've always worked on the assumption that I generate the invoice and they pay through the process of getting the invoice. But that makes sense. Eric, I mean, does that make sense to you?
Yeah, so we're talking about kind of two different payment models, two different ways of doing a service. So the way Mark is describing is more of what you would see with a subscription model. And this is, you might get this with your cell phone company or your home internet company, any company that it's usually more small businesses and consumers. When they buy something on a subscription, it could even be something like Netflix. You usually pay in advance, and then you have that next month covered, or that next period covered. And in that case, the invoice is often automatically generated and treated in some ways like a receipt. So it's both an invoice and a receipt in one. It might just say invoice and paid. Like when I use an email management platform, now I do it all myself because I'm a computer nerd. But back in the day, I subscribed to email services where I could send out, to my couple thousand email list, and I would pay once a year up front. And when I made that payment, I'd get that instant invoice, just like Mark was describing. So for that type of service where you're paying ahead for something, it's common to you pay up front. Like Netflix isn't going to charge you at the end of the month and just assume you're going to pay, right? So if you think of that type of model, it's more common you pay and get the invoice right away. What we're talking about more as the service providers, as the editors, and I have a podcast that I host, and I have an editor who's part of your community, and she charges me at the end of the month. She'll send me an invoice and say, this is how many episodes I edited this month. This is the rate per episode, and this is how much you owe, and then I'll go in and pay it.
If I may, it sounds like it's a big difference between, I guess, the markets, where what I was talking about is more of a B2C, or a business to consumer, or, business to small business, or a person to person, or a P2P, or maybe a producer to podcaster at a small scale. But like I was saying, I'm hitting that wall where it's B2B, where the other B that I'm servicing is a huge B with billions, business. They like to work how you're saying. Bill us at the end of the month, and whether it says, net 15, net 30, we're going to treat it like net 90 anyway.
We can talk about what that means too.
Pay it whenever we get around to paying it. But of course, we as digital service providers have hooks that we can withdraw things if they don't pay. But yeah, that's why I'm very eager to hear about this, because I want to get more into the invoicing at the end of the month with the big bills for the big companies that have the big bucks.
Yeah, and if you think about the why behind that, it kind of comes down to who takes the risk of either providing a service and not getting paid, or paying and not getting the service. And usually the more powerful party in the relationship can kind of demand which of those, if they want to put the risk on the provider, or if they want to take the risk as the payer. And as you get to these big businesses, billion-dollar companies with lots of lawyers and all the things they do, say in the Atlanta area, I'll just throw out Coca-Cola. They're a big company that everyone's heard of, I'd imagine. So if you're working with Coke, they have a lot more leverage in the relationship than someone like me working by myself. So they want to put that risk on me and just have me trust that they'll pay. And as you said, it might take a while. We can talk about what payment terms mean on invoices as we go. But I believe even if I get paid late, if I'm working with a company that size, they're not going to run out of money. They will pay me.
Right.
So that's part of how this whole world kind of works. There's a trust and a risk factor.
Yeah, I've also found, maybe this is my belief because I'm venturing out into this, but Parkinson's law was brought up in a previous episode. Basically, the work will expand to fill the resources available. And with these big companies that have these big billing departments, that's all they do is they pay out the invoices for, let's use the example, Coca-Cola. Coca-Cola probably has thousands of invoices that they have to pay every month. And
probably
so
thousands every week, maybe every
probably
day.
Thousands every week, sure. And
Yeah.
they probably have departments of hundreds of people, and that's what they're doing is taking that, is the correct information on there. Yes. Do we have the legal agreement, whatever? Yes, they rubber stamp it. Okay, pay it. Whether it's $2, $2,000 or $2 million or maybe at 20 million. I'm sure that there's like a threshold there that I'm certainly not at at a monthly basis where they're like, oh, let me kick it up one more notch. But yeah, that being said, there's lots of things I think in invoicing. Well, that's why I'm glad to have you on to talk about invoicing best practices, all the things that we haven't thought about when we're moving from the B2C or the small B2B or the producer to podcaster, and starting to building our team, servicing bigger and bigger clients, and they are requiring different types of invoices and different net stuff and all the things that I was aware of but didn't have the expertise.
Sure, yeah. To open a little bit of a rabbit hole, we won't go too deep in, based on what you were just talking about. When you work with bigger companies, you might see something called a purchase order or a PO. There's in my app, I built a field where you can put in a PO number, and any good invoicing app, you should be able to put in a PO. And what that means is when you sign a contract with the company that they'll pay you for something, if they're big enough, they're going to have a lot of vendors, and you're a vendor in this case, that they work with. And when they're doing that process, you're talking about somebody in the accounts payable department gets an invoice. If they can look at a purchase order number on the invoice and match it to an existing agreement, you'll probably get paid quicker. If they have to research it, it'll take longer. And now with AI, some of that happens automatically. They might say, up to $2,000 a month on this PO. If the invoice comes into this email box, process it and just pay it out. But if it goes up to 20,000 or 200,000 or 2 million, as you were saying, it might get kicked out for a manual review and move up the chain for approvals. So a higher level person has to sign off on the payment.
And see, that's the crux why we're having you on, is talking about why invoicing is important, why these best practices are important. And you illustrated it just so eloquently, because I knew that must have been some internal process. I knew that there had to be some connection with, we vetted this vendor, that legal has approved, you are approved to pay, and maybe pay at a certain level. I just didn't know what those connections are and how I can help shorten the length of those connections through such as invoicing. And you brought up a good point, like, hey, on the invoice, here's their purchase order. That way in their system, they can tie things together. Again, things I wouldn't have thought about. So that brings up another good reason of why invoicing is important. And for me, at least at this stage in my development, where I'm at professionally, taking the leap from serving, dozens and hundreds at a certain level to, maybe a dozen or less at a much higher level, but it requires different skill sets, different knowledge, different processes, and different tools. And I'm sure we're going to get into tools later. I know you have one to talk about, but really of the invoicing, what it is that we need and why it's important. Anyway, this is great for me. I feel I feel like a very avid listener on my own show here. Like, hey, these are the questions that have been burning at me. So again,
That's
glad
great
to have you on, Eric.
Yeah, having been, I've worn an accountant hat in the past. I've been a corporate accountant. I was in accounts receivable, so I was in getting paid by our big customers. But I sat right next to the accounts payable team. You learn both when you're in accounting. So it's an important thing for the companies. And if you can, as you were saying, if you can follow that system, and do what they expect of you, which other big companies already know, but we have to learn as we go, you'll probably get paid a lot quicker and easier.
So you were there collecting the money and just turn it to your side and hand it to the desk next to you where the guy's paying out the money.
Um, Not exactly, but yes, I was, I don't want to bore you all with it, but I worked on very, very large invoicing and payment processing systems where we would, at the big phone company for Denver that's not around anymore. It was one of my first jobs, and my job there was to reconcile, which means make sure the transactions in our accounting ledger matches what's in the bank account for our business payments account. So anyone who got business phones or business internet from us would pay into that account. So I had to go through hundreds of thousands of transactions a month and make sure it all tied out right. And in that billing system part, I didn't have to think about at that point. But what we were talking about earlier, when they pay, the invoice just pops out and they get that. But then on my side, I had to make sure that the payment went to the right account and it was all handled correctly.
Yeah, see, that stuff does excite me, but I'm sure we're boring the audience. So let's talk about that though, because it's very important. Another benefit to invoicing, and tell me if you agree, is the paper trail.
Yes.
Because I got to tell you, sometimes I have to go back to an invoice just to see which episodes I invoiced, which means my other accounting is kind of sloppy.
Yeah, well, a benefit of having an accounting system and an invoicing system integrated is it helps you with all of that, right? It helps you go ahead and say in accounting, and I have this happen all the time. I have one writing client that is a platform that works with big companies, and sometimes it can take months to do a project and get it approved, and then months more to get the payments all sorted out. So I might have one payment for that client that I do the article and I get paid in a week or two, and I have some that I might have to wait 6 months. And each, because I invoice monthly, I can go back and say, oh, I check off, I got this one paid, check off, I got this one paid, oh, but this one's not paid. And that one will stay in a list and keep bothering me and saying, oh, this one needs to get paid, this one needs to get paid until it's handled. But then if I have a client that I work with on a more regular cadence, I can look back and say, oh, I did this project on the last day of February. Did I put it on that February invoice, or do I need to put it on the March invoice? And having that paper trail makes sure you're doing all of that accurately. And if you make mistakes, chances are the client will figure it out and you can update your invoice. But you could also accidentally not put something on, and that means you did work for free, which is no fun. Or you might accidentally double bill the client, and if they don't notice it, well, you might financially come out ahead. I wouldn't feel good about doing that. I want to make sure we're doing everything with integrity. So having good record keeping and good paper trail is really important. And if you ever end up in a legal dispute, which hopefully none of us ever will, and lawyers are really expensive, but if you ever do end up in a legal dispute with a client over payments, you could say, well, here's the invoice. You can go back into your system and print out a copy or a PDF and email it over. And you have that right there and say, this is the date, this is when it was sent. So those records like we said in the very beginning, they are legal documents about our payments and our work and our services provided. So it's very, very important to have that in your back pocket should you ever need it.
It's funny that you mentioned double paying, because I actually had that happen from a client last month. I sent out invoices either on the 15th for some clients or the last day of the month. And almost every single client that I invoice at the end of the month is on some kind of a monthly plan. It's just a flat rate every month. So it's really just quick and easy. But there's one that pays me through a payroll, their payrolling process company, which is Gusto. They send it to me that way. For some reason, they paid it twice. So like 3 days, and there's a 3-day gap. I got a payment. It's like, cool, issued the receipt or the invoice receipt. And then 3 days later, I got another payment. I'm like, wait a minute. Did I miss something? And that's the importance of that paperwork trail. I love that.
unless they told you it was coming, it was not a bonus. It was a mistake.
No, not in February.
Yeah.
Yeah.
My birthday's in February, so all the companies I work with should give me an extra payment in February, just as a birthday present.
That's how you want the birthday gift, is through cash?
Just double pay me.
28 days if you're getting a monthly retainer, each one of those days, it's like a little bonus.
Yeah.
Yeah, like a 3-day bonus, except leap year, it's only a 2-day bonus.
That's true. That's true.
Now, Eric, when you do most of your freelancing, it is usually one-off gigs, right?
Most of my clients are recurring clients. I have my biggest client I do, it's typically 4 articles a month and 2 podcasts a month. Then smaller clients, some of them are 1 or 2 a month. Some of them it is more random. So I might get an email and they say, this month we need these 5 articles, and then I won't hear from them for 2 months. And then they'll email me and say, oh, I need these 2 articles, or can you handle this one project for me? So it's a mix. I like consistency. It's nice as a service provider to have that predictability in my schedule and my income. But when we're self-employed, that's something that for the freedom of our schedules, we give up a little bit of that consistency and predictability. So some months are up and some months are down. So it really, you said I can't say it depends, but it depends on the client, how I work.
Take a drink. Take a drink. He said it depends. Okay.
I actually have I don't endorse it, but I actually have a Coke Zero here. We're talking about
the reason
Coke.
I was asking for that is because sometimes we will get these one-off gigs, like a launch package, which is going to be, pretty much like half of a month's income. And I think in that case, we might want to do a split payment or something like that. I don't know if those clients that you work for, if you do any kind of that, it's almost like you would expect half now and half later. Or what do you, for a best practice for podcast editors, what do you think about that?
I'd say if you're taking on a really big new project with a big new client, which I actually also have a small financial content agency. So with a small agency, it's much bigger payments and projects typically than the things I'm doing as a solo creator. But the invoicing processes are typically the same. It's end of the month, all that. But if I bring on a new client that I've never worked with for a very big project where I'm going to have to invest a lot of time or resources, then sometimes we do a 50-50, pay half upfront and pay half on completion. And when you do that, it means 2 invoices for one agreement. And that's okay. That's allowed. And if we get into the accounting stuff, it can get more complicated on how you recognize it if you use what's called cash accounting or accrual accounting, but we'll do accounting another time. But
no,
for the invoices, you can break it up however it makes sense for you and the client, as long as you both agree. That's what's going to be most important.
Yeah, I wanted to bring that up because we will have people listening or watching this, and they will be saying from the beginning of the call, when we talk about getting paid ahead of time or after, if they work for one big client and they're a podcast manager, or they're doing the production as well, they're doing all, not just editing, but they're doing more of the things, they might be getting multiple thousands of dollars a month. They might be almost considered an employee and getting paid. They might demand payment up front. So I want to make sure we covered that. It's not that one is better than the other. I think it depends on what you agree with the company or the person that you're working for.
Sure, yeah. And if you can get paid up front, I mean, more power to you. As I said, it's a risk thing, right? So if you get paid up front, there's no risk you're not getting paid, which is definitely better for you. It's just most clients probably won't want to do that, but some will. And as I was saying, let's say you're an editor and you have a new client and they want you to go back and edit old episodes. And they have a catalog of 20, 50, 100 episodes that you're going to dive through and edit, and you'll have one big invoice for that. That might be a lot for them to swallow, and it might be a lot for you to do all that work without getting paid, especially if you haven't worked with them before and you don't have that trust relationship. So in that case, like I say, some big projects, I might say, let's do half up front and half at the end. Or if they're willing, pay up front. If you're able to negotiate it, as I said, more power to you. It's definitely better for you, because then there's no chance you won't get paid if you've already been paid. But if you're working with a big company, even with that kind of project, they probably won't want to do it, but hey, it's worth asking.
Eric, what are your thoughts about like milestone payments? Like you mentioned, either pay all everything up front, or I'll do all the work and then you pay everything at the end. You mentioned, give me half up front and then the rest later. I know some projects, especially big projects, have multiple milestones, and some of those may be like, all right, here's a 10% payment, here's a 20% payment based off some of those milestones, or maybe progress through milestones. What are your thoughts about invoicing best practices with regard to milestone payments? How would you accomplish something like that if you had a client that the work was good and the money was good, but you couldn't wait at the end to get all payment. They weren't going to pay up front, and 50-50 just was not granular enough for such a complex project. What are your thoughts?
Sure. Yeah, so if it's a project that's not going to be like a recurring thing, like you're editing 2 episodes a month, but if it's a project and you think the project will take more than 1 or 2 months to complete, I think that's when you'd start thinking about milestone payments. And maybe, let's say, just for easy math, you're doing a 100 episode package, and every 20 episodes you finish, you get paid 20% of it. Something like that could make sense. It really depends. Sorry, I said it again, on your business and your client relationship.
Well, let me give you a specific use case so you don't have to say it depends. What about like a documentary style narrative podcast where there's a lot of scripting, there's a lot of recording assets. It's going to be an evergreen show. Let's say 10 episodes. That's going to be a nice round number. And after that 10 episodes, you're done. The show is done. Maybe they want to do an episode 11 on like where they now later. But again, we're going to focus on these first 10 episodes. That being said, there's a lot of storyboarding up front. There's identifying some of the interview resources. You may have to interview 50 people for 10 episodes, and on one episode there may be 10, on another one there may be 2, and maybe split across multiple. It's all over the place, right? But it's a big 10 episode narrative documentary story arc, and because of that, you don't want the risk or reward to be too much on either side, because I found, at least in legal and contract negotiations, whoever is holding the most risk typically will lose. If you're doing like an adversarial type thing. Not to say that contracts and invoices need to be that way, but let's not tempt people, right, by having all the risk on one side versus the other. So these milestone payments come into play. But yeah, so in that particular use case where it's a really complicated 10 episode thing, it's going to take maybe anywhere between 3 to 6 months. Again, it really depends on how long and complicated these milestones are, but it's not a set in stone. Maybe one milestone takes 2 weeks to complete, the next one takes 6 weeks. But what are some invoicing best practices for something like that?
Sure. So I would look at how you have agreed on your payments. Is it a flat rate for the whole project, or is it you get paid this much for the interviews, this much for the editing, this much for the stories and the process? So whichever of those you go with, if you complete a part, and in my mind, and this is a different industry totally, but for freelance software developers and coders, I think we're going to see a lot more of that milestone type payments, because you just finished a part of the app and it's working. Now you can bill for that part. Then you start working on the next part. So for the podcast that you're describing, I'm thinking some of those, I'm an avid podcast listener. There's some awesome like 1 season podcasts that are, 7, 10 episodes. The team behind that, if you are the team yourself, yes, I negotiate an equitable arrangement for you to get paid for different portions as you go. Or if it has a specific timeline, and let's say it's 6 months, 6-month project, and you're going to get paid $60,000 for it, there's no reason you couldn't just say, we'll do $10,000 a month for 6 months. So depending on how your contract is put together, you could do any combination. It could be more payments heavily up front, more heavily towards the end, or spread out evenly on the contract period. So I don't want to say it depends, but if you when you negotiate your contracts, be thoughtful of that, because if you negotiate them in a way that lets you get paid periodically, then you can get paid periodically.
So the key word I heard there, and again, that's a great word to use in negotiations, is equitable. Let's come up with an arrangement that is both equitable for you and for my team. So you and your team and your company get what you want, and me and my team, we're covered for the work that we're going to put into this. And so, as you pointed out, Eric, come up with something that is equitable for both sides. Not too much risk is put on one side or the other, and then do your contracts and invoices around that. Okay. Thank you. I know that was a really long, complicated question, but again, some of these really big, complicated projects require, in my mind, a complicated solution. And as you pointed out, I guess it really doesn't have to be. You have to think about it.
Right. It's not a zero-sum kind of a negotiation. Like we're saying, it's equitable. If you do a good job for a client and you're compensated well and fairly, hopefully, they're not adversaries, they're clients. They can, in some ways, they're colleagues. Hopefully you build long-term relationships and can really impress them on their 10-episode project, and they want you to come back and do another one, or maybe a season 2, or who knows what, or they'll refer you to someone else because you impressed them and they were happy and they thought your pricing was fair and your quality was great. So I'd think through that as you build those relationships and negotiate the contracts. Find a way to make it a win-win, because that's what it's all about, right? It's you don't want to just get a bunch of money from someone and have them be mad at the end, and you don't want to feel like you wasted time and effort and didn't get paid fairly. It's finding that spot in the middle where everyone walks away happy. That's what we're generally trying to do in any business relationship.
Eric, I know that you have been a freelancer for years. How long has it been? Anybody? 12 years? 15 years?
So my first
freelancing
big freelance client, I think, started around 2014. That was when I got pretty serious. Though I had a few smaller ones before that through the personal finance blogging world. But I really started getting into it around 2014, and I went full-time in April 2016. So as we're recording this, it is my 9-year anniversary this month of full-time freelancing.
Yay. And wouldn't it be great if there was an invoicing system that was what you wanted? Something that did everything that you wanted it to do? Wouldn't it be great if there was something like that out there?
Would be great. And what's funny about that is, I'd tried so many different methods of doing this. I used to literally have a notebook next to my desk, and every time I finished a project, I'd write it down, and then I'd copy it over and type it into an accounting software and send the invoices from there. And it's like, this is stupid. There's got to be a better way to do it. And then I tried spreadsheets. I tried using my email inbox as the to-do list, and then I'd archive things out when I invoiced. And that seemed like very accident prone. And then I started trying to automate different methods using Asana and Airtable and QuickBooks and those no-code connector platforms. And it would work for a little while, and I felt really smart. And then one of them would change an API, and I was paying a ton of money for it all, and it would break, and I spent more time than it seemed worth. So as you said, wouldn't it be great if there was one platform that did everything I needed? And there wasn't, so I built it. I've alluded a couple times to the app that I built. It's called Freelancer Dashboard, and it offers the tools to track your clients and assignment to-do list in one place, and that's a free forever feature for all users. And then at the mid-tier, it unlocks a handful of invoicing tools. So whenever you mark an assignment as submitted or completed, it will start putting together an invoice for you for each client. You could go in and click a button, and it will generate an invoice as a PDF and attach it to an email and send it to the client and copy you at the same time. So when I have one of those one-off projects and they say, hey, can you send over an invoice? I pop into my app, I say, preview invoice. It looks good. I send it. And then if they have a question, they can just hit reply all, and I'll get notified they have a question. But usually I just get paid. And at the highest tier, you can totally automate invoicing. So as we were saying, most of my clients, it's the last day of the month. Every month, without fail, whatever I've done for them, it needs to go off on that day. And I can turn on automatic invoicing and set the day and time those go out. So as we're recording this, a couple days ago was the last day of the month, and I woke up on the 1st and all of my invoices had been sent and they were in my inbox, and I'll get paid in the next couple of weeks. So it's all automated, and building out a lot more features right now. You can track your revenue by month, which if you don't have a lot of expenses, you could use for your taxes. You could go look in there and say, oh, I made this much in 2025. This is what I need to do for my taxes. But as we go forward, I'm planning on building in payment features and a full accounting system. For now, it can fully automate your invoices, and they're professional. They contain all the things that you would need, line item per assignment completed. Invoice numbering is automated. You can add the client's info at the top and your info at the top if you want. A lot of clients say, you need to put our address exactly this way, maybe a purchase order number. You can customize and do all that, and it just sends out, and however you've arranged to get paid, they can go in and pay. So,
I can think of a couple times a year where that automation really comes into key. And as you pointed out, Eric, or maybe alluded to, I mean, sure, you could build all this stuff yourself through, various different tools if you're around to do so. But really the power comes into, you had this problem, you solved it, you fixed it for yourself, and you thought, hey, let me help others by offering the solution that I made. It works for me.
Totally.
The automation is great 2 times a year, as I alluded to. Christmas, New Year's, Steve has worked with me for a number of years. He knows I pretty much shut off between the time of Thanksgiving to a few days after New Year's. So to have a system that's going to automatically send out invoices based off the work that I'm doing, vice all the email back and forth, is great. As well as the middle of summer, the end of June, right before 4th of July in the U.S., wedding anniversary as well, which is a little bit before. Invoicing is like the last thing I'm thinking of at the end of June. So having all that in automation, just saying, hey, I've done this, click, done this. And then it takes that and says, all right, these are done. Let me automate those. That sounds great. And would that work for something like a somewhat convoluted milestone system that I came up with, whether I did 2 or 10 milestones and bill for 2 or 10 items of work?
Yeah, it could work for that. So to do that, you would enter each milestone as an assignment, basically. Yeah. So when you mark that assignment as done, that milestone will move over to an invoice, and you could click to send it right away. Or if you have automation turned on, it'll go on whatever day you picked. The way I look at it, I was spending so much time on all this, and one of my taglines I've come up with is spend less time on admin stuff and more time making money. So you're not getting paid for sitting around tinkering with invoices. You're not getting paid for doing your accounting. They're just things you have to do. So if you can spend less time on that and more time finding new clients and providing services, then you're going to make more money. No one ever said, I love sitting with Excel manually putting together invoices. Some people might love Excel. Some people might like the results of their invoices. But I've never heard anyone say that combination of, I like making my invoices in Google Docs or whatever platform they use. So that's why I built it to, I don't have to make invoices. They make themselves.
Excellent. I know Mark agrees with you 100%. He loves Excel, but he'd rather be out there making money than making invoices.
True. Oh, definitely true. And those times of the year when I'd rather spend time with friends and family than either work or spend on invoices. Let the invoices handle the work that I've done so that I can just focus on that work and then spend time with my family. And then in the other months of the year, spend time, making more money. So yes.
And if you have multiple clients, you won't forget something. It just works.
Yeah, definitely true.
Eric, thanks for being on the Podcast Editors Mastermind show. Y'all can check out this Freelancer dashboard at freelancerdashboard.com. Check it out for yourself. I've seen it, and it's very simple. Eric, he said a lot of words to describe it. It's a lot simpler than you think, and he's got a great video tutorial he can hook us up with to be able to see how it works before you even sign up. But freelancerdashboard.com. Eric Rosenberg, thanks for joining us.
Thanks so much for having me. And if you sign up, you get a 5-week free trial of all those premium features, and you don't need to put in a credit card number or anything to try that out. So no risk. You can just pop in and see if it works for you.
Excellent. We love that. Thank you.
Thank you.